as I said, I think I mentioned before, Genesis news is well priced in. Genesis disallowed withdrawals to their investors months ago, and Gemini Earn went down as a result of that. There's no question at this point in the marketplace that Genesis is going to go under. So I believe that that news is priced in. Now, the real problem for the crypto market, specifically the Bitcoin market, would be if I'm not sure if it'll be a rebound, but I do think that we will see a pretty continued bottoming process. People always look for this big event to be the bottom of any market, this capitulation, but more often than not, you actually sort of see things range and accumulation, and then prices slowly grind up, actually causing more pain for the people who failed to gain exposure when it was at the bottom. I would anticipate that we see kind of more sideways chop as we see the macro really give us some clarity. I don't expect that Bitcoin's going to skyrocket while the Fed continues to maintain their hawkish tone, and we don't know what's happening with other markets. So I think that that's pretty much my prediction for all markets this year, is that we don't get a raging bull market, at least not at the beginning, but that does eventually happen, whether that be towards the end of the year or coming into election year in 2024 when things tend to turn around. I don't know that another exchange is about to collapse. I believe, obviously, that Genesis is insolvent, but that's been largely priced in, and we can dive into DCG later. Obviously, there's been conjecture about Binance, but that's largely due to lack of transparency versus any actual evidence that there's a problem there. We do know that they have quite a bit of crypto on their balance sheet, but I want to address the notion and the sentiment of what you said, right? People would have said the same thing about FTX in September and October, and they did. After we saw Celsius, Voyager, BlockFi, Three Arrows Capital, Luna, all collapse, people said, if we get one more big one, it's over. And there was nothing bigger than FTX, certainly as far as Sam Bankman-Fried being the representative of the industry on Capitol Hill and being sort of the guy that people look to as the angel of this industry. And what happened? Price of Bitcoin broke down and is now trading higher than it was before the FTX debacle only 2 months later. And people would have told you that FTX was the end of crypto. Mt. Gox was a huge event in 2014. It was basically the only Bitcoin exchange on the planet. It ended up insolvent. People are still creditors, and the asset class came back and continued to rise. So I think it's extremely hyperbolic to say that it would be over. In fact, when people start telling me that an asset, regardless of what it is going to zero and start giving me irrational reasons, that usually means that it's a time to buy. Listen, it would be catastrophic in the short term if something like Binance did fail. I don't see that happening, but if it did, but the market would absorb it and rebound as it always has in the past. Yeah, that's an absolutely that to some degree, DeFi has been the biggest winner, I think, of all of this. Even it does sound very familiar, but what really sounds familiar to me is that the SEC is once again, after the fact, prosecuting or attacking someone when they failed to protect consumers in the first place. And it's completely nonsensical. Everybody on the planet knew in June that Genesis had a 2.1, 2.3, whatever the number was, $1 billion loan to Three Arrows Capital, who was insolvent and filed for bankruptcy, right? Gemini, the Winklevoss twins are blaming DCG. DCG is blaming SBF or anyone else they can get their hands on. The reality is that Gemini had a fiduciary responsibility to their Gemini Earn customers and should have been vetting Genesis. And the entire planet knew that Genesis was insolvent back in June, including the SEC. So why didn't the SEC protect consumers, which is their mandate, by going after these things in advance? All they're doing now is saving face by charging people after the fact, which protects precisely zero of the consumers who lost their money. And Cameron Winklevoss responded, I believe, today and called it lame and effectively a parking ticket, right? This is once again just the SEC looking for an opportunity to appear like they're doing something, a great PR opportunity like they did with Kim Kardashian. And it's complete nonsense because they didn't protect anyone. That's exactly right. And we have seen that Genesis was recently reportedly $3 billion underwater, right? So they have basically $3 billion in outstanding loans. A lot of that is to the parent company, DCG, and that loan will not be called until the 2030s because, of course, you can conveniently give yourself a loan and post-date that 10, 20, 30 years to cure your liquidity issues. But Genesis is clearly, in my opinion, going to go under here. Those Gemini Earn customers will go into Chapter 11 process, just like Voyager and Celsius and BlockFi and FTX customers have. But as I said, I think I mentioned before, Genesis news is well priced in. Genesis disallowed withdrawals to their investors months ago, and Gemini Earn went down as a result of that. There's no question at this point in the marketplace that Genesis is going to go under. So I believe that that news is priced in. Now, the real problem for the crypto market, specifically the Bitcoin market, would be if that somehow caused a contagion into Grayscale and GBTC. I don't think that's going to happen. There are a lot of companies like Valkyrie, of which I'm actually an investor, who are very interested in taking over that trust, who are probably more competent, have been proven more competent to do so. And frankly, GBTC is a cash cow for DCG, and I don't believe that the two are interconnected. But in the rare event that something like GBTC having to be liquidated happened, we would see a massive selling event of Bitcoin, and that would obviously be negative for price. But right now, I think that Genesis itself is largely insolvent, and that failure is priced in. It really depends on your view of what happens with the trust, what happens with regulation, if there's going to be a conversion to an ETF. I don't believe that under this regime, there's literally any chance of a Bitcoin spot ETF being approved. Gary Gensler's not doing that. And I obviously, at this point, with all of the Genesis, Contagion, and news, I don't think that that's who the SEC would choose to approve, even if they did. But I do believe that if you think that somebody can, become an activist investor in GBTC, take it over, improve the product, that there is a massive opportunity there. That said, 50% discount to NAV. What if it becomes 60 or 70? It was 20 and people thought it was a buying opportunity. It was 30 and people thought it was a buying opportunity. I personally think it's more of a watch and wait, and probably a bit risky to take that as a bullish trade at the moment. But that potential upside absolutely is there, as you mentioned. I just think there's some risk involved. I don't think it would be more catastrophic than FTX. I think that in my mind, FTX was the worst possible scenario. Not only because it was the second or third largest exchange, and the amount of assets and the amount of creditors that there were, but because FTX, as I said, Sam Bankman-Fried was viewed as the godsend for the crypto industry, who was going to push through sensible regulation, who was meeting with the SEC, giving donations to politicians, who was basically pushing, and he was the last person that the crypto industry could afford to see go down as a fraud. And he is just that. It's a fraud. This has nothing to do with Bitcoin. SBF is criminal, right? And that was widespread fraud. More importantly, though, with FTX, if you think about it, we had these Celsius and Voyager collapses and these crypto banks, as people like to call them. Your average retail investor who was not really crypto native probably had some of their savings on there because they were looking to earn some yield. Very sad that those people lost their money. When you go to FTX, you're talking about the crypto native traders who are watching this market every single day, who are passionate about it, many of whom were hedge funds and institutions that viewed it as a trusted custodian, had all their money there. Well, those people have now lost their money and they are no longer long crypto, right? And so when you talk about trading, which you brought up, when you talk about trading, for me, the path of max pain for the crypto enthusiast is if price goes up. Your money is gone. You're in chapter 11. You thought that you were long crypto. What happens if you finally get a settlement of 50 cents on the dollar and Bitcoin's trading at $45,000 rather than the 17 that you were credited for when you lost it? Mm-hmm. So to me, FTX is the biggest deal possible because of the people and the community that lost their money on there. DCG would have institutional effects, but your average trader is not going to be shaken by a DCG failure. They're just going to look to buy the dip, as they generally do. I'm just saying I'm not seeing evidence of that right now, and people are already extremely weary of DCG. FTX caught everyone by surprise. Listen, there was that 2-week lead up after the CoinDesk article that kind of pointed out that FTT was the bulk of Alameda's balance sheet, and that it was seemingly an open door between the two. But I mean, for now, I think that people are very hesitant to put much faith in DCG, so that should be priced in. Not acceptable. I think that everyone would ask questions. I think that business model is largely dead, and that there will be ways potentially to make some yield in DeFi. But you want to know what the best earn product right now is? Short-term US Treasuries. Like, why would you take a risk on a 6% crypto yield when you can get 4.5 or 5% buying a very safe bond? And I never thought that I would be saying that, and that's to be back where we are, but that's how people are viewing it. Until the yields are viewed secure and astronomically better than what you're getting from the government, I don't see those products happening. Now, what's interesting, if you want to talk about yield in crypto, of course, is Ethereum 2.0. We had a successful merge, and there will be a baseline interest rate on what you can get on Ethereum very securely by parking it in that contract. And so whatever that rate is could become the sort of benchmark yield rate in crypto. And it would be, ETH plus if you were looking to take on more risk. So it's going to be interesting to see how that shakes out. Ethereum has the Shanghai coming up, which will effectively be the moment when people who have staked in Ethereum are allowed to withdraw. Now, a lot of people, ignorantly, in my opinion, view that as a bearish event, thinking that people are going to withdraw their Ethereum from the stake contract, and that could put some selling pressure. People I've talked to, people who want to get involved, they don't want to put their money into the staking until they know that they can get it out. So there's actually a huge flood of capital that should come in when people know that they will be able to take it out at whatever point they desire. And the people who have put their money in ETH staking already without knowing that they would ever be able to get it out, those people are extremely dedicated and are not looking for an excuse to pull it. So I think that that CeFi market is dead. Now, listen, I have no blinders on as to the extent of human greed and stupidity and the amount of times that we see bad mistakes repeated again and again and again. I mean, if you look at Voyager and Celsius and all of these, we basically went 180 degrees from the ethos of crypto and recreated the 2008 financial system with inferior rails and less security. Yeah. It's embarrassing and it's absurd. And many of us got caught up in it. I'm a Voyager creditor. And so do I think that humans will learn their lessons? Potentially not. Do I think people will try again? But I don't think anyone's rushing to, there's no way that you can get those yields without taking risky behavior. And people understand that now.